have in your bank account. Those are various forms of currency, but they're not money in the traditional legal, historical, or even in an accounting sense, because money has always been and will continue to be a tangible asset. And the logic for that is that goods and services are paid for with goods and services, and physical gold coin or digital gold coin circulating online in the internet, which is what we do in BitGold, which is part of gold money. Those are tangible assets. So you're using a tangible asset, gold, to pay for another tangible asset, the goods and services that you're paying for. And the reason why this is important is that when you're doing an exchange this way, assets for assets, there's no counterparty risk. In contrast, when you're using dollars or any national currency, you have counterparty risk. If you're the merchant and you accept dollars, you have the regardless of how you accept them, you have the risks of whether the bank will accept it, whether the Visa card mechanism or MasterCard mechanism, will accept it. You have what's called payment risk. So until you actually spend the dollars that you receive, you have that payment risk. The other forms of payment risk are, of course, inflation and the loss of purchasing power if you hold those dollars for any lengthy period of time.
Definitely, and I definitely agree that in principle, gold is a better form of money. It represents all the characteristics that money should have. But I guess that my next question to you is, why do you think the money bubble, as you call it, will pop anytime soon? Why don't you think that the powers that be can just kick the can down the road and keep the dollar and other world currencies afloat for a lot longer?
Well, that's a good question, because a key part of the money bubble is the debt that's been created. Again, gold is a tangible asset. Dollars, national currencies, these are just liabilities of some bank. And those banks have built up a lot of debt. The governments have built up a lot of debt. And debt needs to be serviced. In other words, you have to pay interest on that debt. And in order to pay interest on that debt, you basically have to create enough wealth to service that interest. Now, what we have in the system today is so much debt that the Federal Reserve and other central banks have lowered interest rates to zero or below zero in order to minimize the interest rate burden that governments are paying. But what that's effectively done is it's impairing the economy. It's destroying capital. And it's capital that's and the whole capitalist society. People voluntarily interacting with one another to improve their situation. That's what created the high standards of living that we have today. That's what's created the rising standards of living throughout history. So by destroying capital and impairing the capitalist system, wealth is being destroyed. It's not being created. So what governments have failed to do and banks have failed to do, and economic managers have failed to do, is to realize the extent of the debt that we have today is unsustainable. And just by lowering interest rates and lessening the burden that a government may have, you're not going to be able to sustain that forever. There's certain things in economics and finance that are beyond question. And when it comes to math, and when it comes to generating cash flow, you have to have enough cash flow to basically service the debt. And we've reached a situation where that cash flow is not sufficient. There's not enough wealth being created to service the mountain of debt that we've got around the world.
Now, you mentioned how central banks are destroying capitalism with this paper money supply that we have. Now, you sent me before the interview an article from Howard Buffett, who is Warren Buffett's father, and I just would like to read a couple quotes from the article because it was a really interesting article. He said that throughout history, quote, paper money systems have always wound up with collapse and economic chaos. And he went on to say that thereafter human liberty disappears, just like, quote, monetary chaos was followed in Germany by a Hitler, in Russia by all-out Bolshevism, and in other nations by more or less tyranny. So did you want to discuss a little bit about this, the relationship between paper money and the destruction of liberty, and on the flip side, gold and the protection of liberty?
Yeah, Howard Buffett was absolutely brilliant, and that little speech that he gave back in 1947 was extremely prescient. But he understood the essence of sound money. Sound money is money that you as an individual own. When you have physical gold, it's money that you own. The dollars in your bank account or the dollars in your pocket, that's not money you own. That's liabilities of purchasing power that other people owe to you that say they're going to make good on it, but history shows that those types of systems ultimately get destroyed. But more importantly, as it relates to liberty, where is the control? Do you want to control the money, which you do when you own gold, or do you want governments or banks or central bankers to control the money? It's a question of where the control is. If you don't control your own money, you don't control your own destiny. If you don't control your own destiny, you don't have freedom. And that's been the essence of sound money throughout history. It's a point that was well understood by the framers of the Constitution, which is why they put gold and silver actually in the Constitution itself. But we've lost sight of that today, which is unfortunate, and that's what's allowed the money bubble to arise and to reach the extent that it has reached.
Now, do you see any hope in the future of us moving to a sound monetary system?
Yeah, it's going to happen eventually. It always does, sooner or later. And governments are either going to accept it willingly or they're going to be dragged into it. For example, after the American Civil War, we had an unsound money system. Up until 1860, the money was sound. And then Lincoln, in order to finance the war, created greenbacks, which basically was a government-issued paper currency that created a lot of instability. And in 1869, the government recognized that things weren't going well with this crazy greenback system and that they had to go back to the sound money provisions of the Constitution. So they created the Gold Redemption Act, allowing, dollars to be redeemed once again into gold. And planned for it over a 10-year period of time. And in 10 years, they did, in fact, go back to a sound money system. We've been off of a sound money system now for quite some time, but inevitably we're going to go back because we're in a system that's unsustainable. As I explained earlier, there's not enough cash flow to service all this debt. There's too many promises have been made, and a lot of those promises are going to be broken. After that occurs, we'll ultimately go back to a sound money system, and hopefully we'll do it the right way. Another example, of course, is after the War of Independence. During the War of Independence, the first government of America, the Confederation, issued the Continental Notes, which is what they were called. They eventually were destroyed in hyperinflation. And in the 1780s, the framers of the Constitution recognized that the monetary system was a mess. So they, in order to create a more perfect union, created a common market and a common currency called the dollar, which was defined as a specific weight of silver at that time. So hopefully we'll go back after the collapse of the currency in a sound and prudent way, but it doesn't always work that way. Germany, for example, in the 1920s, its currency collapsed in hyperinflation, and that ultimately led the way to fascism and the destruction of personal liberty. But hopefully, that won't happen in the United States when the dollar reaches its inevitable end, which means that it either has to go back to a constitutional basis or ultimately get destroyed. I don't see any other alternatives.
Now, you're talking about how we're going to see this hyperinflationary collapse and that, with Germany, it went to fascism, but you're hoping that it'll move more to a sound money, capitalist, free market system. Now, I guess, how much is this dependent on the people waking up? I know a couple of years ago, I was kind of skeptical about, it doesn't seem like people are aware of how corrupt our system is. But it seems like now in some areas, such as a lot of people waking up to how corrupt our system is, people supporting either Trump or Bernie Sanders. A lot of people are arguing they're not channeling the anger of the people in the correct directions. But the fact that people are waking up, what do you think that says about the possibility of moving towards not a fascist system, not a tyrannical system after this collapse, but a more free market-based sound money system?
Yeah, I think it's a good reason to hope that we're going to make the right decisions, as push comes to shove, down the road. But there's a more fundamental issue here that you really have to think about. And maybe the best way to describe it is to go back to the Soviet Union the year before it collapsed. And to say that, if you were walking down the streets of Moscow the year before the Soviet Union collapsed, and you said to somebody on the street that, you had perfect foresight and you knew in a year that the Soviet Union was going to collapse and the ruble was going to collapse, 9 out of 10 or 99 out of 100 maybe of those Soviet citizens would have said to you, it's not going to happen because the government won't let it happen. And today, if you go walking around the streets of America and you said in a year's time the dollar is going to collapse, maybe 9 out of 10 Americans would say that it's not going to happen because the U.S. government won't let it happen. But, what we're talking about here is the markets, and the markets are always bigger than any government or any group of government, because what the market is an individual doing things to protect themselves and protect their family. So, what will sort of happen would be my expectation is that, yes, if we do get increasing economic trouble, people will take steps to protect themselves. And obviously the best way to do that is to avoid promises of others and own tangible assets of all sorts. And I think that, when that tidal wave arrives, it's unstoppable, just like it was with the collapse of the ruble back in 1990.
Now, what about in the UK right now? I know in America, as I was pointing out, we're seeing some people kind of wake up to the corrupt system. Is a similar thing happening in the UK right now? What do you see happening in the UK?
Well, the situation over here is very interesting because in just over 4 weeks' time, they're going to be voting on what's called Brexit, which is British exit from the European Union. And the hyperbole is really increasing quite dramatically. And they're pulling out all of the stops on the Remain campaign, which is run by Prime Minister David Cameron. He now saying that European vacations are going to be more expensive if we pull out of the European Union. And the Leave campaign is probably a little bit more down to earth and not making the hyperbolic statements that the Remain campaign is. But the bottom line is that nobody knows the future. And nobody knows what's going to happen to the UK if it remains in the EU or if it pulls out of the EU. The fundamental issue that needs to be debated is, do you want to control your own destiny as a country, or do you want to have it controlled by bureaucrats sitting in Brussels who are not even elected? And unfortunately, that particular point is not getting as much coverage as one would expect, although the Leave campaign is trying to focus that as the key issue, whereas the Remain campaign is trying to claim that it's economics is the key issue. But the key issue is being able to control your own destiny. Right now they say it's too close to call which one it's going to be, and we still, as I said, have 4 weeks to go. So it should be interesting as we work toward that June 23rd vote.
Definitely. Now, the next topic I'd like to discuss is about the gold and silver markets. Now, you recently discussed a little bit about some interesting things happening in the precious metal markets. You've talked about how the spot price of gold, it has been higher than the futures price for a while. I think you said since January 2013, and this is called backwardation, and this is the longest period of backwardation that you've seen in the gold market. Did you want to discuss a little bit about this?
Yeah, normally gold trades what's called contango. The spot price is less than the future price. But we've been in a very unusual situation since QE3 was launched back in January of 2013, where the physical metal is relatively not available, and consequently it's caused a distortion in prices. And this is also true for silver. From time to time, there have been actual shortages of silver, if you'd gone into a coin shop to buy silver, you wouldn't be able to get any coins. This has happened several times since January of 2013. But what we're seeing is the effect of, again, just like governments are manipulating interest rates lower, they're trying to cap the gold price to keep it from rising, because the gold, a rising gold price, it's sort of like a barometer as to the health of the global economy. And as we know, the economy within the U.S. as well as globally is doing very poorly compared to past periods. And the gold price should be rising because of all of the financial problems, particularly the banking problems and insolvent banks around the world. But, governments are sitting on it. So you're getting distortions from what should be a normal ratio or normal pattern in terms of the way gold should be priced. I think the bottom line, though, and the key point to take away from this is that gold historically, using all my mathematical models, is very undervalued. But aside from the math aspects of it, the beauty of gold is that when you have physical gold, and I'm not talking about any of the paper representations of gold, I'm not talking about futures, options, ETFs, gold certificates, or anything like that. I'm talking about physical gold. Either you have in hand and store yourself, or you bought physical gold and have someone store it for you, like we're doing in Gold Money and in BitGold. Once you have that physical gold, you don't have counterparty risk, and you're not contingent or dependent upon anyone's promise. So I think that's critically important at this moment in time, given all of the problems we're seeing in the banking system. And just as an example, you look at the stock price of Deutsche Bank. It's basically trading at the low level it was in 2008 at the bottom of the financial crisis back then. And we're not, supposedly yet even in a financial crisis. So what happens when the financial crisis hits? And as you look back through monetary history, you know that a financial crisis recurs periodically. Even recently, we had the one in 2001. We had another one in 2008. So, every 7 or 8 years, you're due for some kind of a problem. And I would expect that either this year or next year at the latest, there is going to be another financial crisis. And what we as individuals have to do is to prepare for it so that we and our families are protected come what may.
Now, what is your perspective on investing in gold versus investing in silver? Which do you see will perform better in the long run?
Well, first of all, I wouldn't use the term investing because gold is not an investment. It's money. It's not an investment because it doesn't generate cash flow. It's just a sterile asset. If you put gold coins in a vault and a stack of $100 bills in the vault, at the end of the year, you still have gold coins and you still have a stack of $100 bills. The difference, of course, is the gold coins will preserve purchasing power, whereas the stack of $100 bills will not. The only way those become an investment, or the only way money becomes an investment, is if you actually invest it into something that is a wealth-creating process. Gold doesn't create wealth. When the price of gold goes up, purchasing power is simply moving from the people who own dollars to the people who own gold. So when you're buying gold or buying silver, you first have to ask yourself, why am I buying it? Are you buying it because it's a safe haven and you want the protection and the knowledge that gold has preserved purchasing power for thousands of years? Well, then you want to buy physical gold or physical silver. If you're buying it to trade, to try profiting from fluctuations in the price, I wouldn't recommend that. I would leave that to the professional traders. Then you can go into various paper forms of gold like ETFs and options and futures and the like. So if you're buying gold for the right reason, which is, to protect yourself and to preserve purchasing power, then when you're buying physical, there are only two ways to do that. You buy it and store it yourself, or you buy it and have someone store it for you. Now, the interesting thing about gold and silver is that, historically, silver has also served as a form of money, but in the 19th century, particularly, the industrial demand for silver started to grow. Initially, it was with photography. More modern times, it's been with things like solar cells and medicine applications, although it's still useful in photography as well. So silver has two types of demand. It has a monetary demand and it has a industrial demand. And that makes silver a little bit more volatile than gold, which only has a demand basically for its use as money. So when you're looking at gold or silver, you have to look at the gold-silver ratio, how many ounces of silver it takes to equal 1 ounce of gold. Historically, it's around 16 ounces of silver to 1 ounce of gold. Presently, it's up around 72 ounces of silver are equal to 1 ounce of gold. So historically, silver is cheap relative to gold. Back in April of 2011, when gold was at 1,900 and silver was at $50, the ratio is around 31 or 32 ounces of silver to 1 ounce of gold. Last year, the ratio got up to 84 ounces of silver to 1 ounce of gold. So you see this volatility that silver has relative to gold. So what my recommendation is that, both metals are good. And if you want to buy silver, I would say that it should probably be, 20 to 25% of your portfolio, allowing for the fact that it is more volatile. And given the fact that silver is cheap relative to gold, as both metals move higher in terms of dollar prices, silver will outperform. It will form a larger percentage of your precious metals portfolio over time, simply because of silver, the gold-silver ratio moving down to the 30-25 area, 30 ounces of silver to 1 ounce of gold or below.
All right. Well, before we let you go, I just wanted to touch on one last subject. You've talked about before about how the precious metal markets are manipulated and that eventually the physical market will regain its power. Basically, you're saying that the paper markets, such as the ETFs, those prices are manipulated, but eventually the demand in the physical market will overpower the paper markets. Now, my perspective is that, and I know Mike Maloney of goldsilver.com has talked about this also, about how the manipulation is just an opportunity to acquire gold and silver at very low prices. What is your perspective on this? Did you want to discuss briefly a little bit about the manipulation, and if you see it maybe not as a bad thing, but as just an opportunity?
Well, it is an opportunity, but it's also a bad thing because you don't want governments interfering with the market process. Whenever you have government intervention, it's counterproductive. And it's just typical with government. They'll do something and they end up with consequences, unintended consequences. And that's true regardless where you see government intervention. So I think it's bad because government intervention is bad. I'd like to see markets traded freely without any kind of government intervention. Oil, money and politics is sort of like oil and water. They really don't mix. And that's why the provisions were put in the Constitution as they were, to have a sound monetary system, which unfortunately was abandoned in 1971 when President Nixon told his Treasury Secretary John Connally to, quote, suspend temporarily, unquote, the dollar's formal link to gold. Well, it's been 44 years or 45 years of this temporary suspension. I think we're probably ready to go back to a sound monetary system. And hopefully governments will have learned that expedient political courses of action are not the best thing for the economy and definitely not the best thing for people living within the country.
All right. Well, James Turk, thank you so much for joining us today. Are there any last thoughts you'd like to add before we let you go?
No, but I think the important point is that there's a difference between physical gold and paper gold. They're entirely different assets. Physical gold doesn't have counterparty risk. Paper gold is dependent on someone's promises. And as the financial system, I think, continues to unravel in the months ahead, you want to focus more and more on avoiding promises and owning tangible assets of all sorts.
Did you want to share with the viewers where they can find you online? And I know you have your website, goldmoney.com, and also you have BitGold. Did you want to discuss a little bit about these?
Yeah, well, Gold Money and BitGold are very convenient ways to buy and store physical precious metals in different vaults throughout the world. And I recommend that people look through both. One of the advantages of BitGold is that you can get a MasterCard where you can load the gold directly onto your MasterCard and then use that MasterCard for making payments in either there are three different currency cards: U.S. dollars, British pounds, or euros, depending on where you live.
Once again, James Turk, thank you so much for your time today.
Okay, thank you, Elijah. Great speaking with you.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Brother John F. Former futures broker, stockbroker, and technical analyst, Brother John F. joins Reluctant Preppers for the first time to examine the real story behind the Puerto Rico default and what it signals for other U.S. municipalities and the U.S. itself. Where are gold and silver moving next? And can technical analysis even be used anymore in a highly manipulated market? Finally, who is the real Donald Trump? What will he do to America as a president? And would he crash the U.S. financial world to shake out the ready-to-fail banks and reset the system? This interview is not to be missed.